So we'll start with you've probably had enough of the Bank of England stuff by now, and we'll start with the US dollar as usual. Um, so essentially, what we've seen is the continuation that we spoke about in yesterday's meetings with that impulse correction continuation. Okay, so no surprises there. We talked about the divergence between the central banks supporting the US dollar, and therefore we've got a continuation of the overall weekly bullish cycle, printing fresh highs today, and no reason to think that this continuation of the dollar can't continue. Now, having said that, we have come up already into the minus 27.2, which is a first target. And the way I do that is I measure. So when we got an impulse and then a correction, first thing I'm looking for is the correction to start to decelerate. And what I do is I draw my Fibonacci from bottom to top of the impulse. And as soon as we hit the 38.2, I'm looking to see if we are starting to decelerate. And I'm looking for bullish structure to go long, in this case, in a bull market. Now, however, what we saw was the price coming lower and lower and lower. So you just have to be patient and you wait for that price to decelerate, and you do that on a lower time frame, such as the 4-hour chart. If you're looking at a daily impulse and correction, then you can use the 4-hour chart to monitor how that correction is performing. Is it continuing? Is it slowing down? And so forth. So what we saw here was a correction that didn't slow down until this point here. So we broke up, we broke structure, and this is the point when you start thinking, right, I want to start engaging in this market. Okay, so that's just a demonstration of how we monitor the corrections, and then we got this continuation. So we got this continuation, and what I can now do is I can measure. Well, sorry, let me pull back a bit. If at this point here, so as we're showing signs of moving up, now even at this point, so if we go back another step, and let's say we're working now from the 15-minute chart. Okay, so at this point here, it's a clear sign. I mean, based obviously on what we got out of the Fed yesterday, that was the move. But at this juncture, you want to start measuring the bottom of the correction to the top. So the bottom of the correction to the top. If I can get that in there somewhere. Anyway, this gives us the onward projections. So this is how I derive the minus 272 target. Okay, and then you've got the minus 618 higher up, so you can actually just draw a box, and that's the area that we're targeting for the continuation. And then once we get up into here, you can then reassess what's going on. So I just thought I'd give you a little rendition of how I do that. Trying to get out of this thing now. Do you want to exit? Yes, I do. Thank you. Right. Um, right. So that's where we're at. So we're up into the box pretty much. And what I'm presuming is that we're going to have a continuation today of the upside. Um, so we've got a breakout here that failed to the downside. So day one, day two of the 3 day cycle, and day twos are typically a continuation. So I'm looking for a continuation. This is day one because we failed to break the week's low. So we've got um, Monday was the low, and then Tuesday came along and we broke that low, but then we failed and we moved up. So when we do that, we've got day one longs, and now we've got day two longs, and I'm expecting day two longs to take this higher. Now we've already come higher, so it's not to say we can't come lower. Nice and confusing, but I would presume that we've got support in here. So even if we do come back in, perhaps we're going to ride higher. So maybe we need to come down to go up, or we're just going to continue higher from this point on. Because we've essentially come up, we've pulled back, and now this could be the continuation leg. So if you regard this as an impulse, so let me draw that. So impulse, correction, continuation. All right, so that's the US dollar. So as usual, put in here what it is that you want me to look at. So just give me 2 seconds, guys. I'll be back in 30 seconds. Right, I'll try re-sharing my screen. 1 minute. Right, let me know if that works for you, Davs. Okay, great. No, we haven't. We've just gone through the dollar, so we're going to start going through the pairs now. So I'm going to start with euro. Right. So euro, I've got here listed as a potential continuation trade, which would make sense considering we're regarding the Dixie as a continuation. So, in fact, I'm going to put that up in here. So euro dollar, uh, day two of the 3 day cycle to continue lower. So impulse. So get rid of. Well, let's start from the daily chart. So downside impulse, correction, downside continuation. Measuring the correction from top to bottom brings us the 106.03 level in as a target for the day ahead. And then when you look at the lower time frames, we've got the impulse, correction, continuation. Hourly chart. We had the, what was that, a sort of a W formation. We've moved into the neckline. What we're looking for now is a break of this area, a break of the support area. Break, which might look something like this. So impulse, correction, continuation, perhaps. Okay, so if this is going to go lower, I mean, it might not even give the correction. It might just tumble. We don't know. But on the lookout for a downside continuation for the day ahead. Dollar CAD, I'm being asked. Dollar CAD, first red day. No, it should be first green day. There we go. So yesterday closed higher for the first time in a number of days. Dollar CAD. Okay, so we had Monday lower, Tuesday lower, Wednesday inside day, but bullish on the Fed. So we came up from Tuesday's low. We closed higher on Wednesday. So that gave us a first green day. So a first green day is a signal day, and we're looking for longs, but we want to buy low. So, for instance, if we were in the London session, this here would have been an entry because we were buying low within the range. Not typically the entire day's range, but the session range is fine. So you're buying low within your session. So the same would be for the US session. We want to buy low in our session to see this continue up. So we've got a W formation, and a W formation is a reversion pattern. So we can expect the price to come back into this support area. Now I've made this a very wide box because we just don't know what's going to come out of the session today. I mean, we're coming up to it now. I think we've got US jobs data coming up, and some bit of Canadian stuff there as well. So the next 15 minutes. So it'd be interesting to see. I mean, this could be, if the data comes in line with a tight labor market uh, sentiment, then that could be the fuel for a continuation in the dollar. And we might not get that correction, and we might just see a onward move. But I'm going by the technicals, so we're in anticipation of a correction before the next move up. So personally, I'm just going to let everything play out, and then I'll be looking to the Wall Street Open and review where we're at, having let the data come out and the market do what it wants to do. And then later on in the day, nearer we get to the Wall Street Open, is where I'm going to be looking for my setup. So this is just really a review of where we're at for now and what we might expect for the day ahead. Okay, so that's dollar CAD. Oil. Right, well, we've already started to see this move that I was looking at earlier this morning, so it's already rallied. Okay, fine. So we've got to move that up now. So W formation. So looking for the pullback. So this leg here, I'm looking for the pullback and then to ride it higher. So what we've got here is we're day 3 of a 3-day cycle. So let me explain that. So the high of the week. Okay, so on Monday we opened here, and then on Tuesday we came up and printed a fresh high, but we failed. So this is a false break to the upside, and we've come lower. So that's where we start our day count. Day one of shorts coming in the market. Right, so this is the first day of shorts. This was the second day of shorts. We closed lower. Right, so although we squeezed up, we still came lower again. So you can regard that as potentially new money coming on. So day 1, day 2 of shorts. And then what you can anticipate after 3 days of shorts. So we've got day 1, day 2, shorts coming in again, breaking yesterday's lows. You can anticipate the failure. So that's what I was doing this morning, anticipating that failure and looking for the move up. So we've got basically a short squeeze in play. So we've now broken that resistance, so I can regard this now as support. Okay, we're above yesterday's closing price here. All right, so that's very bullish. But again, we've got this W formation, and I can expect a pullback. Now, whether it's going to come back inside of the yesterday's closing price, I don't know, but we can just monitor it. So looking for a short over the next hour or so to bring us back into balance, and then assess the grounds from there, maybe potentially for a continuation up. So impulse. Now we're clearing out imbalance up to here, perhaps. So I've done that wrong. But anyway, there's an imbalance over here that we're potentially coming up into. And in doing so, perhaps we'll start to peter out. But in any case, we can just monitor it from a lower time frame. So impulse, correction, continuation, perhaps for the day ahead. Short squeeze. Squeezing the shorts from yesterday. And let's see how we get on. I mean, this is likely to be a resistance area. This is an M formation. And that's the neckline. And perhaps we're coming up into the neckline that might act as a resistance area. Now, we could just continue up without a pullback. Maybe we won't get the pullback until we've hit that resistance. But we do have a resistance line, and perhaps we're coming up into that resistance line and coming back to go higher. Right, gold. Yeah, the birds are out tweeting. Right. So I've got gold down as a continuation. No, what have I got it down as? A dump and pump scenario. Right. Pump and dump and pump. Well, it's a day 2 continuation trade. So day 1, so we broke up on Wednesday, breaking the week's highs, but we failed. So day 1, day 2 continuation, but perhaps we're going to get a pump and dump. So we've come into a support area. So if we go all the way back to here, this area here, in here, these highs, right? So this has been respected area and level of support and resistance in the past. So perhaps it's going to be a support area for the day ahead. And if so, we can expect a correction and perhaps a downside continuation. And in doing so, I mean, what we can do is we can measure the correction. So impulse, correction. If it does correct, we can measure it to gauge when we're looking for our entry to go short, how far we want to take this lower. But just by looking at the levels, we're likely to have stops in and around here to target. Let me just pull this in. Okay, so keeping an eye on gold then. 5 minutes till the data. So the ATR on a daily basis is about $15, or $16. And what's the range been today so far? About $16. So that we can use that just as a gauge. It's not set in stone. It's the average price range over a given day, over 21 days. Has been about $16, and we've already done about $16 on the day so far. That's not to say we can't do more. But in that regard, looking for the long, the dump and pump would be the way to go at the moment. So at the moment, we might have the low of the day in place. We might. Okay, so low of the day. And if that's the case, then we can look at this trend line and we can go to the lower time frames to start looking for our structure. And we can say, right, if we get above, I mean, even as low as soon as we get above here, we can start building our bullish thesis for the New York Open, well, the Wall Street Open. Right, so we're in support territory. So in fact, I'm just going to get rid of, well, we'll leave that there. We're in support territory, that box, green box. So this is the demand area. This here is a weak structure. It's nothing too significant. But if we do get above that, we can start building a thesis towards a move up. The major swing structure is not until 1922. So down, up, down, if that makes sense. So right, so that's the swing structure we need to break to really confirm the bullish bias. But what I'm looking for here on a break of this level is confirming that we might be putting in a low for the day. Or perhaps we're going to come back into it. We don't know. But in any case, something like that. Okay, US 30. So from a daily perspective, we're bearish. We've made lower highs, and we are on the front side of the bearish run of late. We broke, what did we break? We broke some structure over here in this. The main structure, however, is over here. Now we've got an M formation. Right, that's not to say that we can't come lower, but just be wary of holding on to anything before we get a pullback and move lower. So M formation, neckline, right? Lows to target. Okay, so looking for these lows. Front side, short. Okay, so looking for shorts, continuation trade. A 3-day cycle, where were we at? Where are we at? So day 2. So this was day 1 shorts, day 2 shorts, continuation trade lower. Now, that's not to say that we're not going to get a correction before going lower, but the bias is to the downside. And resistance, for the moment, is here, and then slightly higher up in here. Euro yen. Euro yen. Let's have a look at this euro yen. So looking for a correction. Looking for a correction up to come lower. So we've broken structure over here with this move lower. We've got all of this down here to target. Right, these are longs that have been left untouched in the money longs, so coming down for their money into this support area. I've marked up on the charts, and we can anticipate a move up to come down, but that's not to say that we're not just going to drop. We might just drop without giving us the pullback. Right then, so any other queries, guys? Dollar yen. Dollar yen, expect it to be rallying up towards 150. Where is it? I haven't got it on my chart on my watch list for some reason. Should be there. There it is. Um, well, we've come into support. We've come into support. Usually, I'd anticipate this to be a impulse, correction, and continuation. But given the fundamentals, I think this was just a technical move, and perhaps we continue going up. I think this was a stop hunt, as in all of these longs, trap volume up top, moving away strongly here, and perhaps we get the continuation to the upside. But I'd be cautious with this pair unless we get above 148.20. Then, given where we're at, the bias is to the downside. So that strong move, correction, so correcting the imbalance, meeting resistance at some point, maybe to come lower. But that doesn't really make sense fundamentally. So we've got the Bank of Japan later, well, tonight. So we might need to wait and see what comes of that. But I'm not sure I'd want to be involved with this pair at the moment. It's middle of the range, and I don't like stuff middle of the range. I want stuff up high. I'd like to have been in that move there or buying the pump, but certainly not doing anything while it's in the middle. So, yeah. So we've got Lagarde speaking later on today. Let me look into that quickly. I've glanced at it, but I haven't got my head into that one at the moment. We've had some hawkish. Uh, what have we got? Some ECB hawks have been out. Of late, but I haven't got any information here on Lagarde's speech at the moment. I mean, I'm not sure that she can say anything that's going to shift the recent announcements that she made last week. Um, yeah, we'll just have to keep an eyes on it and see what she comes out with. Right, so I think we can wrap it up here, guys. Um, any other questions? Bit of dollar bullishness coming in following that data, reinforcing the tight labour market thesis. Okay, great stuff. Right. Well, if I see anything cooking as we get towards the Wall Street Open, I shall let you know, and we shall see you all later on in the day, and we'll do another meeting at the end of the day to wrap things up. Okay. Thank you for all. Thank you to everyone for being here, and see you later.